Good morning, everybody. This is Patrick MontesDeOca with the live trading room here at the Equity Management Academy. What I would like to do on this report is to examine the silver market in particular and see how we use Fibonacci fans, Fibonacci ratios, and basically how we interpret in real time these indicators and how we use them in combination with our own algorithms. If you take a look at the chart here, it's a silver contract, it's a silver futures contract, and what I have here, this line here that you see is basically the 200-day moving average. And we published several reports back in early December where we anticipated that we had a major bottom confirmation in the making and that we were expecting a major breakout to the upside. We also published several videos that basically commented that our target was about 18, and now that we've accomplished that target and we've taken a look at where the market is, it appears the market is in a continuation pattern. One of the validations that we get is the market has closed above the 200-day moving average, which is very bullish. After working this average here for the last week or so, we finally have been able to break out into the upside, which points to much higher prices. How high are we going to go? In order to basically identify those objectives, what I do is I use Fibonacci retracements. And if we take a look at the Fibonacci retracement from the high that we saw last year to in August to the recent lows here, we have a pretty good indication where we potentially can retrace back in price from this correction that we saw back in August, sometime in August, September of this year. What we see here is that after a low of basically 1568 approximately on December the 20th, the market has risen to where we are at 1847. That's a pretty substantial move in a short period of time, but it appears that even though the market is overbought, it still has some room to run, potentially reaching the 61.8% retracement of 1909, 1910. Being able to accomplish that target and closing above it puts into perspective 20.04, which is a 78.6% retracement of the entire move from August of last year, August, September of last year. Now, this validates for us two indicators. We have the market trading above the 200-day moving average, and we have the market basically confirming that we've accomplished a 50% retracement from the low that we saw last year at 1843.44. The market trading above 1844 puts into perspective once again the 1909 level. Okay, so let's see how we use Fibonacci fan lines to identify where the market may give us some kind of resistance levels. We use the Fibonacci trend lines to give us an indication of support and resistance trend lines. And what you see here basically is that the market on the 24th of February made a new high of 1846, crossing this resistance trend line, targeting the 50% Fibonacci retracement, accomplishing that target, and coming back down here on the 27th to test this level that now is support. Once resistance is broken, it becomes support. From this level now, we have risen to about 1848.50. And that is basically from a level that we saw yesterday of 1826.5, 1827. Closing above 1844 once again seems to activate this upside pattern that, even though we are dealing with what appears to be an overbought market, we still have objectives to accomplish in the upside before this move is over. Now, one of the things that we do is we use our algorithms to identify for us basically where we are in relation to time and price, and specifically where we are at these levels. And the algorithm that we produce gives us the ability basically to identify the supply and demand levels in the market, and we use our algorithms to particularly and very specifically identify price into these levels here. And what you can see here is basically a cluster of these lines here, these red lines here, that represent supply for us. And in order to identify how far the market could extend itself from this breakout that we see happening here in this continuation pattern, it looks like the targets, the weekly and the sell harmonic objectives, are in that 1862 area. The first level is 1855, 1862, all the way up to 1888. What this indicates for us is that closing above 1844, once again, it activates all these targets that we have here of 1855, 1862, 1882, all the way up to 1909. And then we want to see what the market does when we accomplish these targets here of $19. A $19 handle basically is coming up. If you would like to see more what I do, please contact me. You can email me at support@ematutrade.com, or you can give me a call, 818 area code 805 area code, 418-1744. This is Patrick MontesDeOca. Until next time, my friends, be well. Good trading. We'll talk to you soon.